concentrating on few stocks. They buy into large variety of stocks. Now what Warren Buffett says, okay, why to invest in your 20th best bet when you can invest in your top 5 or top 10 that will give you a higher returns. Again what he says, practice inactivity and not hyperactivity. Now these all things are things which he has lived. And he has made a lot of money, not inheriting a single cent from his parents, and now one of the richest investor. The investment philosophy which he follows, suppose we try to replicate that and we have a fraction of the wealth which he has, still that will serve the purpose. He said, do not trade for trading's sake. Most of the people, today I'll sell these stocks, then I'll buy a few more stocks. Now when you are doing buying and selling again and again, you are not an investor, you are a speculator. Frequent trading is the hallmark of overactive investors who tend to wind up more losses than gain. Be a decades trader, not a day or swings trader. Buffett also says, like, in 50-60 years of my investments, there have been around 20 years where I have not picked up a single stock for my company. And even though his investment portfolio might range into billions of dollars, that is, you got to practice inactivity. You should not be trading just for the trading's sake. Then you are just trading to make your broker rich, not yourself. Don't look at the trigger. When I was coming here, I was finding people are standing outside BSE and then they are looking at which are the share prices, which are up, which are down. You should turn off the noise. Why? So that you can focus on the business, those business which are there in your portfolio. That makes more sense to him. You should study the playing field and not the scoreboard. Because anybody who is playing well on the field obviously would be the winner. So when I am studying playing field and how FMCG sector is doing and how various companies in FMCG sectors are doing, so then if any company's products are more in demand, so then obviously what will happen? The results that will come would be better for that particular company. They say it is important to know the value of something rather than the price of everything. What we see on screens is what? Price of everything. What we don't know is the value. Many people have said, okay, all people knows the value, but all people know the price, but then there are very few people who know the value. What does Buffett says? Okay, in case something is of value, $1, I am willing to buy at 40 cents. That means when he makes an investment, so then I am buying a stock for 40 rupees, which stock which I think is of value what? 100 rupees. And then after I have bought, suppose the market is not that good, the price corrects and it falls from 40 to 20, but I have done my proper study. So what I'll do, at those low valuations, I'll not sell and I'll even accumulate more stock. Because sooner or later, what is going to happen? The market would discover. This is what we are calling it as value investing. Warren Buffett happened to be the only student from Ben Graham who got A++ in 22 years of teaching of Ben Graham. And therefore now we know what is achieved. View market downturns as buying opportunities. At present we are finding market downturns. So instead of feeling scared about it, Warren Buffett says, okay, we'll look it as a buying opportunity. He says, okay, market downturns aren't body blows. They are buying opportunities. If the herd starts running away from a good stock, get ready to run towards it. You know what is your circle area of competence and you find a good company in that sector is available at what? Very low price. So then in that situation, you should accumulate as much stock that is possible. Search for quality business that go on sale for reasons other than underlying fundamentals of business or the quality of management. So that in turn might be what? A short-term phenomena, now where the price of the stock is down. But nothing is wrong regarding the fundamentals or what the business. The price at which Tata Steel was trading last year and the price at which Tata Steel is trading this year. Now the price at which it was trading last year is comparatively low, but that was not on the basis of fundamentals. So that in turn will mean what? This is an 11th investment strategy that would meet the criteria of Warren Buffett. So in case he would have been investing in India, then what he would have done?
at those prices he would have bought Tata stake. Further, Buffett says that investors don't lose when market falls, only disinvestors